Markets are under pressure with the Nifty once again flirting with the crucial 20 DEMA, and it is a very important technical level.
Mid-caps and small caps face severe selling pressure with the small cap index down 1.5%. Overall market breadth deeply in the negative with nearly 4 stocks in the red for every one which is higher.
Interglobe Aviation is the top Nifty loser, down almost 8% as operational disruptions continue over the weekend. And today, the company has also a deadline to reply to the DGCA show cause notice by 6 p.m. this evening.
As CNBC TV18 celebrates its 26th birthday, industry stalwarts and market veterans ring in the opening bell from our studios. Veteran investor Ramesh Damani says we should get ready for the index in the 7 figures by 2047, compounding at 12%.
Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios on this very momentous occasion of the 26th birthday of your favorite business news channel, CNBC TV18. I'm Hormuz Fatakia. With me, as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormuz. Great day, 26 years for CNBC TV18, and it's all thanks to our viewers, right?
We owe it all to them, and that's what has been the driving force behind this 26-year journey. But the markets today have not begun this week on a very optimistic note, though. The Nifty continuing to flirt with its 20 DEMA at the moment of around 26,000, still managing to hold on to those levels. But as of now, not good going for the index, not good going for the broader markets either. And the Nifty for now at 26,012. So it's around about what, a 200-point cut on the index. It's the broader markets that are facing the bigger pressure, though. The mid-cap index is now down 1,000 points, and it's almost across the board selling that you're seeing. At the lowest point of the day is the mid-cap index, no different on the small caps as well. So as the index continues to defend some key technical levels, can't say the same for the broader markets.
Absolutely. The broader market's taking a beating, both the mid-cap index, the small cap index, all of them down over 1.5%, right? And in some stock-specific action, Indigo is the top Nifty loser, down for the 7th day in a row, and its market cap, as you can see, is now below 2 lakh crore rupees. CNTech is another one of those. It's down 6%. In fact, that stock had seen its worst week last week, and it was one of the worst since its listing, right? Now take a look at the realty sector. That sector also taking a beating, down about 1%, but also the PSU bank stocks. Those are also in the red. If we can bring up those stocks for you, and if you see Bank of India, all of them in the red, over 1% lower.
And that's not good reading for the markets. The PSU Bank Index is now at the lowest point of the day, is down almost 6.5% from the peak that it had hit on the 26th of November. And since then, it's been a downward spiral for them since the clarifications came in on the FDI norms. And of course, leading the losses has been Indian Bank, SBI too, among the top contributors to the Nifty downside today. And it's only IT and only very little is what is holding out in the green in today's session. But the other talking point in today's session before going into the weekend was Biocon, and it was supposed to have a board meeting over the weekend where it announced that it is now going to make Biocon Biologics a 100% subsidiary. The board has also approved the swap ratios for the transaction and cleared a proposal to raise up to 4,500 crore rupees through a QIP as well. Ekta is here with the key details of this deal and also the key takeaways from the conversation that she had with Kiran Mazumdar-Shaw. Ekta.
Well, yes, Biocon is going to make Biocon Biologics a 100% subsidiary. They will be shelling around 6,951 crores in terms of a share swap, or the share swap is worth that much. And separately, they will be paying an additional $400 million to Mylan to buy out their stake. Now, a couple of key important points that the management did mention and did speak to us about as well in the call as well as in the interview, where one of the key reasons for doing this is that Kiran Mazumdar-Shaw mentioned that the Biocon stock, in fact, was undervalued post Viatris biosimilar buyout, which took place a couple of years ago. And with this, they will also be getting rid of the holding company discount that Biocon had. Now, they will have to assess Serum Mylan's timeline in terms of shareholding. But if it comes to, say, a succession plan, the board has been very well managed. And so hence, in terms of putting to rest any kind of speculation in terms of the longer-term plans that Serum as well as Mylan could have in Biocon going forward. Now, about the promoter holding, which has now fallen below 50%, Kiran Mazumdar-Shaw said that she is comfortable with a 44% promoter holding in Biocon and that it is large enough. They will be raising additional funds for the Mylan stake via QIP, and this is something that they'll have to complete by the end of March. And before that, there will be an 1,800 crore bridge financing, which they will have to undertake. $1 billion is a comfortable level of debt, which they will look to manage going forward. The EBITDA and the EBITDA growth should be sufficient enough for the company as a whole to manage the debt levels. And when it comes to Syngene, remember that they have been reducing stake in Syngene since a couple of years, but they are looking to retain their current shareholding in Syngene, which is at over 50%.
All right, Ekta, many thanks for taking us through those details. But let's take a listen to Kiran Mazumdar-Shaw on the merger and the impact it could have on the company's financials. Take a look.
You know, I think, Ekta, this whole concept of promoters is also fast dissipating. And of course, I will continue to be the largest shareholder in Biocon. I think at 44%, it's a pretty hefty shareholding. And I think today it's really about ensuring that you have good governance and that, shareholding should just be about being rewarded through performance. Well, I think we were oversubscribed when it came to the QIP, and I think we will go the QIP route because that would be the most elegant way of raising capital. And since we know that there's a huge interest in the Biocon stock, and especially through this announcement, we believe that the QIP would be the preferred route. So I think $1 billion debt for the kind of business we are building is a very comfortable debt to manage. And of course, as a company, because we will be throwing off free cash flow now going forward, given the fact that we've retired all the structured equity debts, which will of course throw up another 300 crores next fiscal, and the fact that we are now pursuing this route of merger, where a lot of the minority interest calculations and the kind of related party transactions will also free up more profits, I think puts us in a very strong position.
Kiran Mazumdar-Shaw there of Biocon. The other newsmaker today had been Fino Payments Bank, and after receiving that in-principle approval from the Reserve Bank of India to operate as a small finance bank, the stock though is taking a bit of a knock in today's session, down at the lowest point of the day now, 8.5% lower as we speak. Earlier today, we spoke to Rishi Gupta, the MD and CEO, to understand how all of this would aid the company's growth strategy. Listen in.
From a margin point of view, I think the margin of a lending business and annuity income which will come up will definitely boost the bottom line of Fino to a large extent as we move in the direction of a small finance bank. As I said earlier, we already have the rails on the ground. We have the people at the corporate level. We already have a lot of people on the field. So our cost structures will not drastically change or will get added to a large number when we move from a payments bank to a small finance bank. From an investor point of view, I think a lot of profit booking is happening at this stage because this has been in the offing for the last couple of months. So some profit booking is happening. But from a long-term point of view, I think the build-up to the small finance bank and further as a small finance bank, I think the certainty with regard to the top line and especially on the bottom line will be there. We expect that the bottom line growth will be exponential once we move to a SFB model.
And Indigo is the top Nifty loser as operation disruptions continue. The company is also due to respond to the DGCA show cause notice by 6 p.m. today. Madhya Mujawar is here with all of those details. Madhya, tell us what the impact has been like so far.
Well, the impact is huge because Indigo is India's largest airline, controlling 65% market share. It operates over 2,200 flights every day. So we can only imagine how many passengers were impacted. And since December 2nd, Indigo has cancelled nearly 6,000 flights. hitting close to 9 lakh passengers, many of whom were left stranded across major airports. Some missed their job interviews, some missed their own weddings. Many don't have the money to book flights on other airlines due to the exorbitant rates. And it is a crisis that India has never seen before. Indigo CEO and the COO have been given time till 6 p.m. today by the DGCA, the aviation regulator, to give a complete comprehensive response on their failure to ensure reliable operations. The airline is slowly pulling itself out of a crisis that has shaken the entire aviation ecosystem. It claimed to have operated 1650 flights yesterday, which means nearly 600 flights continued to be cancelled. The Indigo board has set up a crisis management group to bring operations back to normal. As per the Aviation Ministry, Indigo has processed refunds worth 610 crores and returned 3,000 luggage bags to passengers. But that's very little considering the scale of impact this crisis has had on passengers. Indigo has been the only profitable airline in India and has been expanding rapidly, and it would have never anticipated this kind of crisis. The stock is down nearly 15% since the crisis began, and the airline has lost over 37,000 crores in market cap since the 27th of November. So operations may be improving, but the accountability questions and the regulatory consequences are far from over for the airline.
Far from over indeed. 9.5% lower now, and as Madhya went on with her link, the stock kept on moving lower as well. And 9.5% now, the biggest single day fall that the stock has seen since February of 22. And the biggest, so it's almost 4 years now for Indigo to have witnessed such kind of a fall. 7th straight day of losses for the stock. Market cap below 2 lakh crores, as Arundhati mentioned earlier in the show as well. And now even below the 1.9 lakh crore mark as well as we speak. So top Nifty loser, Indigo, not good going for the stock, and the uncertainties seem far from over. Madhya, thank you for that update there. Take a short break. More news and updates on the other side.
"26 years of CNBC TV18.
Welcome back. You're still with us on Business Lunch. Markets under pressure. Nifty over 0.5% in the red. But the mid-cap index taking a beating, down over 1,100 points. A U.S. trade delegation will visit India from December 10th to the 12th to push forward talks on the first tranche of a bilateral trade agreement. Sources say the team will be led by Deputy U.S. Trade Representative Rick Switzer, with India represented by Joint Secretary Darpan Jain. While this isn't an official negotiation round, both sides are aiming for strong progress on tariff issues.
Meanwhile, US President Donald Trump has weighed in on the proposed deal between Netflix and Warner Brothers. Speaking to reporters on Sunday, Trump said that he expects to have a say in whether the deal should move forward or not. Listen in.
I met with Ted. I think he's fantastic. I think he's, in the history of Hollywood, has really been almost, you could say, nothing like what he's done. He'd go back to Louis B. Mayer, maybe, Metro Goldwyn Mayer, MGM. Ted has done an incredible job. I mean, he had a company that was very troubled 7 or 8 years ago, and he took it over, and he's really done a legendary job.
Should they be allowed to buy Warner Brothers? Should Netflix?
Well, that's the question. They have a very big market share. And when they have Warner Brothers, you know, that share goes up a lot. So I don't know. That's going to be for some economists to tell. And also, and I'll be involved in that decision too.
Did they make?
They have a very big market share.
Did he make any guarantees to you about the merger if they do merge? Then?
No, not at all. He came up. He was in the Oval Office last week. I have a lot of respect for him. He's a great person. But he's done one of the greatest jobs in the history of movies and other things. And he's got a lot of interesting things happening aside from what you're talking about. But it is a big market share. There's no question about it. It could be a problem.
On that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned.
"26 years.
26,000 taken out on the downside on the index now. Below the 20 DEMA is where the Nifty currently trades. A cut of 210 points at the lowest point of the day is where the index lies. 98 stocks on the mid-cap index in the red, 96 on the small-cap index in the red. Well, it's been 26 years since CNBC TV18 went live, a time when markets were in a completely different dimension. Prashant Nair takes you back 26 years to tell you the shape, size, structure and returns that the market has provided over what has been an incredible period for the Indian economy.
26 years ago, CNBC TV18 went live and India's markets were a completely different universe. Even as we complain about how this has been a tough year, why not take you back 26 years to tell you the shape, size, structure and returns over this incredible period? Let's take a look at the massive reset which just played out. Let's look at the size of the market itself to begin with. From under 5 lakh crores when CNBC TV18 started to now over 470 lakh crore rupees in market capitalization. It's been a 100-bagger over the last 26 years. The number of companies listed has also grown nearly 5 times in this period, as you can see up on your screen. A look at the growth in trading activity in cash markets, stunning. I mean, from about 1650 crores to about 1 lakh crore in terms of daily turnover. Perhaps the biggest structural change, the financialization of India. Mutual funds share in household savings has gone up. I mean, I found data for 2011-12 used to be about 0.9% to about 6% today. And of course, many believe that we're just about starting. From barely 20 lakh demat accounts in 1999 to more than 14 crore today. From almost no SIP culture, which is now the bedrock of all the money which is coming into the market. I mean, regularly 20,000 crores every month. This is a market no longer owned by institutions, at least only by institutions. It's a market owned by India's households. Let's go back to the Nifty50. I mean, the OG before the Y2K hit, right? 50 names that told the story of old India. And the names, I don't know how many of those names you recognize. I mean, Oriental Bank of Commerce was there in the Nifty. There was IDBI Bank in the Nifty and so many others. I mean, PSUs, lots of refiners, etc., etc. And that has changed. IT, private banks beginning to rise. Old-timers, of course, would recognize some of the logos up there. Cut to today, only 17 survivors on the benchmark. Basically, out of the 50 in 99, only 17 are there in the Nifty50. And Reliance and others on your screen now. Let's take a look at the average. What did the average mid-cap, small-cap, large-cap look like in 99 and what it looks like now? What I've done is taken the current definitions of large, mid and small for comparison's sake. Top 100 is large, next 150 is mid, and everything 250 first onwards is small. In 99, the top 100 companies made up 87% of total NSE. Today, that number is 60%. The largest stock used to be HUL with a market cap of 50,000 crores. Reliance, of course, 3-month ended average market cap November is 19.5 lakh crores for Reliance. Midcaps make 20% of NSE now, while back then they were about 9% of the NSE. The largest midcap used to be Gujarat Gas, 800 crore market cap. The largest midcap today is 125 times that by current definition. DRL worth 1 lakh crore in market capitalization. Small caps now make up 20% of the NSE today. Guess what they were? 4% back, with the largest small cap being Foseco India, 150 crores in market capitalization. Today, ACC with 35,000 crores in market cap is the largest small cap. Markets ultimately follow earnings, and India's earnings story tells you why maybe this bull market has legs. And I've just divided this into phases. Between F505 and F510, EPS grew 11%. CAGR. Then came almost like a lost decade, F510 to F515, just 3% earnings growth. And of course, I mean, followed by about 6% from F515 to F520. And of course, I mean, COVID hit 20 to 25. We've seen a CAGR of about 20%. This is the strongest earnings phase we've had in about 2 decades or so. I will end with, of course, asset class return stable over the long term. As you will see, equities have delivered. The Nifty has compounded at about 12% for 26 years. It's beaten gold, beaten bonds, and every other traditional asset class.
So Prashant outlining how much the Indian markets have grown in the last 26 years since CNBC TV18 started. But with that, it is a wrap on this edition of Business Lunch. Midcap Radar coming up next.
26 years